promised as well, these were some of the things that we're looking at as we look into the various asset class. So the first one that we talked about was cash equivalents. So we know that basically interest rates actually have an impact. Like right now, our base rates are at one of the lowest points in Malaysia's history, which is really bad. If you're actually having money in things like fixed deposits, you would have been, looking at, okay, what other options are there over the last 1 to years as well. If you actually have property loans or even other loans, then you probably will be happy because the amount that you're paying is less in terms of the interest. But interest rates will actually increase as well. Equities, general headlines this year will be China, US, Malaysia to a certain extent as well. So we all know with China, basically we are seeing a significant correction, although it's recovered a little bit, about 30% dip in China's market as well. Clamp down with the tech sector, starting with Alibaba and then going to Tencent, etc., and then the crackdown on the education sector in China due to social governance. But generally, long term, definitely still positive China, as we're actually seeing that China has a lot of room to grow. There's just a matter of time, when they will equal the US in terms of being the next superpower and eventually may overtake the States as well. Even if US, still in the midst of bull run. There was a minor correction not too long ago and has continued to rise as well. Generally a little bit overvalued in certain areas, but there will be pockets of opportunity as well. Malaysia in general is still languishing a little bit as well. Positive news is that in recent months, foreign investors investing in the Malaysia security market finally turned positive after many months of many years actually of being negative actually. Yeah, so there's a little bit of what we're seeing on the equities side. Property, just as a quick rundown, January we're seeing an increase actually in property transactions. The exemption RPGT and the newly budget announcement of RPGT exemptions, those are also positive for the property market as well. During the height of the pandemic last year, property prices probably fell about 30%. So significant correction. But generally, we are seeing that there's been an increased uptick of property transactions happening. So more people are buying properties, whether for their own stay or upgrading their property to a bigger one, or it's their first time property. Basically, what we're actually seeing is that crypto it went through quite a bit of volatility this year already, but generally it's still in the midst of a bull run as well. Generally, crypto is increasingly seen as a viable asset class. Major payment providers, PayPal, Mastercard, Visa, or accepting crypto transactions as well. Google Finance has crypto listed on it as well. Yeah. Generally though, we're actually seeing that Bitcoin and Ethereum, Ether has the prime positions, while other altcoins etc. are still very speculative. Yeah, but generally still in a positive uptrend for crypto. So basically, viewpoint is to what I would suggest considering is just get your feet wet. Put in a small sum, see how actually crypto actually performs, because there's nothing like having skin in the game and know what's your potential downside. So. And last asset class, last asset actually, that's part of the alternative investments asset class will be gold as well. So of course, gold has its criticism that gold doesn't generate returns. It's not like you put two gold bars in a room and 10 months later there'll be gold baby ingots or something like that. Gold is just yes, it is a precious metal, but some that are against it, we call it a date metal because it doesn't do anything really. It just sits there. Yeah. But the viewpoint is that gold still is relevant. Crypto hasn't overtaken gold's position yet as well. So the viewpoint of gold is that it's still good to have a small portion in your portfolio in terms of overall adverse market conditions. Like for example, when there's significant market corrections, gold tends to hold its value or the increase. Another viewpoint of gold is that it may be a good inflation hedge, or in terms of when there's hyperinflation, when inflation happens at a very high rate, because gold tends to keep up with inflation in time as well.